Welcome to another live interview where you viewers have the opportunity to also ask questions in the live chat below. The report period is reaching its end, but before it does, however, we have to shift our eyes towards Zinzino, who have published a report for the second quarter of 2022. And with me here today on link to comment on the report, I have its CEO, Dag Bergheim Pettersen. Welcome back.
Thank you for that.
You have just released your report. Tell us, what is your first impression of the second quarter?
Well, the second quarter has kind of a little bit below what we were hoping for. I wouldn't say it's lower than what we were expecting, but it's a slightly growth despite of all the surroundings of the world and the different revenues that we lost of the war of Russia and Ukraine. But overall, I'm quite pleased with the quarter, I would say.
A little bit below expectations. The revenues were more or less in line with last year's second quarter. Revenues landed at 329.5 million SEK and gross profit at 105.5. The figure that did change, however, was the EBITDA that saw a decrease, 20.1 million compared to last year's second quarter of 33.4. Tell us what is behind this development.
Well, first of all, last year was where we were growing pretty steadily the last 2-3 years, and this year we was a little bit like our ambitions was a little bit higher. So we have invested a lot. So we just launched a new website. We have launched new products. We have done a lot of investments in different new markets. So in all of these investments, when the revenue is a little bit below what we were expecting, then the gross margins and the bottom line, it's hurting a little bit of all those investments, like shortly, I would say. So that's the reason why.
And are these investments under external costs that I noticed increase a little bit during the quarter?
Yeah, you could say so, but it's over the whole line, I would say. It's a little bit like in the marketing budgets. It's a little bit like that we have more employees, staff. New markets requires other investments. Product development requires a lot. So, and IT and tech is like really demanding, but this is like something that we will get some good things out of in the next upcoming years. I'm sure about that.
Then we'll keep an eye out for that. But we'll move on to the markets now. And one market seems to cancel out the other during the quarter. North American region saw the most growth at 76%, found pharma at 31%. Your biggest region, however, the Nordics, decreased 18%. Are these developments in line with expectations?
I would say yes and no. Of course, we were hoping for more and no decrease at all in the Nordics. But it has been like a spiral that we have had, like in Finland, we have lost a lot of revenue, but we are getting back on track in the other markets, I would say. So I'm happy about that. I'm quite pleased to see the numbers for North America, although a lot of the revenue is coming from Europe and the Asian markets, building and having the revenue in the US. And then at the factory, we've gotten a couple of new clients, which I'm happy that we have gotten in this period of time. So overall, I'm happy. But the country that I'm most happy about and the region that I'm most happy about is actually the DACH region, where Deutschland and Germany and Austria and Switzerland, that's where we have the highest growth in this period of time.
Tell us more about the DACH regions. What drove that development?
Well, we bought the company Enhance, so that was one of the reasons. We have been investing a lot of money into that market like for years, and we also know that has the highest potential, like Germany with the highest population in Europe. So we've been doing step by step and investment step by step, I would say. So we are kind of getting the output of all those investments.
Enhance was acquired during the quarter, but now that you mentioned there's a lot of potential there, would there be more potential acquisitions in the DACH regions moving forward?
Well, I wouldn't say the DACH region in general, but I would say that we are potentially looking at several other acquisitions. That's one of the strategies that we have, is that we want to grow organically, and at the same time with buying the companies that fit our culture. So we are searching, we are looking, we are in dialogue with different companies all across the world. Not necessarily only in the region of DACH, but it has to be the right fit for us. And this was a quite fast acquisition done, and it was right. I'm pleased, I'm happy of the outcome of all that.
Then let's leave the DACH regions, because I'm also curious about your new markets. Singapore and Africa comes to mind, but also Belgium and Ireland that reached full market status in Q1. Could you give us an update to how these markets have developed?
Thank you for that. Well, South Africa is still kind of in an early stage, but it's going good. Ireland is slowly picking up. Belgium, we have been selling in Belgium for many years, but now we officially opened that. Singapore has been a good market, but it's steady and good. Those markets in Asia that's really exploding are like the Philippines and Thailand and Taiwan, that we have done just incredible growth the last, I would say, quarter, which you don't see in that status report. But that has been like the development. All of the markets that we are opening are kind of taking some time to get traction. It takes time to build a customer base, to get the brand out. So I'm looking like overall that I'm happy that we're doing that steady growth. But when you mention those markets, I know that those markets, we've been setting them up, but it's still a little bit early in stage. But the investments of Thailand and the Philippines is like, and Taiwan we did last year. And now I see the fruits coming from that.
And in the APAC regions, how has COVID continued to affect these markets?
I would say in China, it's affecting still because of lockdowns. It's easier to travel all across Asia now with less quarantine, less masks. I think that next week, it's the end period of Singapore using masks, and in Europe, you don't see that anywhere. So of course it impacts. But it's starting to be almost at the same level as Europe now. It's my signals. They still wear masks, but they can meet and have meetings, and they can travel without too much restrictions and quarantines, which is good for us. That has been a block for us in the Asia over the last 2-3 years.
I see. Well, when reading in the report then, we can read about two launches. First, the HbA1c test, as well as a new product aimed for children. We'll go over the tests first. What can you tell us about its functionality from a consumer perspective?
Well, there is an increasing levels of diabetes 2, pre-diabetes. This is kind of a pre-diabetes test. The regulation tells us to be a little bit cautious about the names. That's why we're giving it like a really hard name. But what it does is it measuring the long-term blood sugar. So you can get like a early warning about how your diet and how your exercise is and what you're doing. So that's gonna, this is really good. And it's also basically based on our philosophy that we have personalized nutrition, test-based nutrition. So it's on our journey to build that brand that we are the ones you will seek to when you would like to do a test. So I am thinking that these new tests, both this test and the D-vitamin test, is supporting the balance test, which is the one that we have taken the most of on the planet, and it's supporting the brand. And of course, the test is also supporting 3 products for us, which is the main reason why you should take the test on our side from the financial point of view.
So how much does one of these tests cost for a consumer?
Around 500 kroner, Swedish kroner, or 50 euros, a little bit depending on what you buy. But it's you get a report, you get a follow-up, you get a diet report, you can gain a lot of that if and also you can save time and energy and probably avoid getting diabetes, which is diabetes 2 then. So that's maybe where you gain the most.
The other launch during the quarter was Balance Oil Tutti Frutti, aimed for children. Tell us about the product and how what sets it apart from your more traditional balance oils.
It's not a lot of a difference from the other ones, but the taste is, like you say, chewing gum kind of taste. So the flavor for kids is extraordinary good. We've tested it out with kids for the last 2-3 years, and they love it. And it's the start of a concept of kids, a kids concept, where you can, when you take a test, a balance test for kids, you can find a defined report for kids because their body is different from the adults. They use more energy, so they might need more oil. So you need to test that out. But the flavor is fantastic also for adults as us.
I would call flavor quite a significant difference. But tell us, how does the rations differ? Is it more oils in the Tutti Fruttis or less?
It's the same thing. So it's just the flavor that is different from the other ones. So that's the thing.
I see.
We are building the blocks in the company based on what we have.
And before launching this product, did you note a demand for your products for a younger consumer?
Oh yeah, it's a huge area. Kids, it's a huge area. We are selling to kids before this as well. So this is an addition thing. The main thing is that the test is more like personalized to kids. The reports is more personalized to kids. So we will add more products to kids over the next two years. So, but we're gonna take it slowly, steady, and do the products professionally, of course, but also so it's targeted to kids.
Then it's something shareholders will have to keep an eye out. We gaze ahead now. You've adjusted your financial targets. The goal of revenues became 1.4 billion SEK from 1.5, and EBITDA margin was taken down 1 percentage point to 6%. Tell us, what was behind these adjustments?
Well, we see that the targets that we had in the early stage of this year, which we pointed out, I think some of the world has changed. You can say that the war in Ukraine also took the revenue down for us. But we see inflation. We see that energy prices all across the world. Also, to get access to ingredients, oil, olive oils, and all those things, is the demands has been like different, I would say. So the world economy is getting also to us. So I'm pretty pleased and happy that we can increase a little bit this year and then have control over our bottom line. But I don't want to stop our development too much. We have lots of things that we have invested in: tech, product development, new markets. So I try to find a balance between the growth or the lack of the growth and not spending too much money, but don't stop the development, because long term, I'm totally sure that we're going to reach the goals of having more revenue than 10% each and every year, and even more. And then when the scale of the business goes up, then I'm sure that we're going to earn a lot of money the next years. So it's just short term. It's an uncertainty in the world, and you can probably see that all across Europe and the world in Asia and the stock markets also.
Of course, of course. Dag Bergheim, that was all my questions. I see no questions in the chat, but I thank you very much for your time and wish both you and Zinzino good luck.
Thank you.